My name is John Allen Shaw. I'm an auditor, I'm a tax accountant, and a financial accountant as well. I audit primarily small businesses and government entities or non-government entities, NGOs. I'm here today to look at the financial statements that are submitted to the IRS. They're actually called Form 990s. Financial statements submitted to the IRS on behalf of Invisible Children Incorporated. This is for the fiscal year of July 1st, 2010 to June 30th, 2011. Again, the Form 990s are essentially a financial statement for non-profit organizations. I'm going to try to make this quick because I know everyone's attention span is very short. Moving on, you see line 12 first, the revenue from 8.2 million to 13.8 million. That's an increase of 66%, 66.8%. Then next you have net profit. Net profit increased from 189,000, or essentially 190,000, to 4.9 million. That's an increase of 2,470%. That's ridiculously crazy. And then the next thing we have is salaries and benefits. Up here on line 15 of page 1, you have $1.7 million. That's 19.32% of the total amount of expenses. That's kind of high, considering that what they do later, and we'll get to that in a minute. But again, the salaries is 1.7 million. On line 22, net assets, which is the amount of money and currency that's invested in short-term investments, those types of things. Net assets and it is about $6.6 million. That's an increase of 384% from last year of just 1.7 million. Moving on, they completed 2 programs here. One program is in Africa of 3.3 million. The other one here in the United States is 3.9 million. That's a total of $7 million. But that's not always and that's not all in 1 year, right? That's over the course of period that is outside the fiscal year, right? So that doesn't necessarily give us a true picture of what happened in one particular year. Moving on, let me see. Yeah, this was very interesting. Part 5, they have money in the Cayman Islands, actually. In line 4A and 4 sub B on part 5 of Form 990, they have money in the Cayman Islands. For what reason, I don't know. But that was somewhat interesting. Moving on, you can see here, everyone's right on the internet. Jason, Lauren, and Ben, all three have been paid anywhere between $85,000 to $90,000. You can see here, the total of which is $262,000 for these individuals right here. But that's only a small sliver of what's going on, and we'll talk about that later. Right here on part 9 of the functional expenses on Form 990, you can see again the total expenses that were a part of grants that the company had granted out to other entities is 2.8 million. That's 31% of total expenses. You can see here that the total of both the officers, the 414,000 and the 1.1 million, when you tabulate that together, add that together and divide by the total amount of expenses, which is the 8.9 million, you come up with 17.5%. So what we're saying here is that for every dollar that was spent, 17 cents went into someone's pocket. And so that's what we're saying right here. And again, this is kind of telling, because what you have is for almost every dollar that went out to other organizations in the form of a grant or an assistance or what have you, on this 31.6%, of every dollar that went out, 50 cents went into their pocket. So that's kind of odd. I mean, that's really high. That's kind of high. So again, they only spent 31% of their expenses went out to help other organizations or to do their programming or whatever. And of that, half, an additional 50 cents went into someone's pocket. So Moving on, travel is kind of high. $1 million to travel back and forth between here and Africa for one fiscal year. That's 12% of their total intake. I don't know what to make of that. That's kind of steep. Depreciation is a non-cash expense, the $218,000. We'll talk about that in a minute. Other things here. This is somewhat peculiar as well. We have production costs, film costs, professional services, licensing fees, and postage, and blah blah. The deal is that the production costs and the film costs, you see production costs are $851,000, right? And that right there doesn't break out, how much labor was involved in those types of things. It's $851,000. In addition to that, they actually outsourced to another company we're going to talk about in a minute, but their income was zero. The company's income was zero. It's very, very odd to me. This here, all other expenses, this $531,000 is an aggregation of all the other expenses that they didn't list. Usually, if it's 5% or greater, I would have detailed it out. And right here, you're looking at 531. You're looking at almost 6% of the total expenses here, of the 8.9 million. That's almost 6%. And so I would have broken this all other expenses into its detailed component so it wouldn't bust 5%. The law here allows for them to get away with at least 10. But again, I just wouldn't do that if I were auditing the books. But nonetheless, that's what it is. This is on page 11. Balance sheet, you have, this is a telltale sign right here that's again peculiar, or it's very odd to me. The beginning of the year they had $800,000. At the end of the year they had 5.9 million, and that in and of itself is not a bad thing. But the problem that I find is that it's taken out of the cash account and pushed into savings. And we're not necessarily saying it's a savings account. It could be mutual funds, treasury bills, stock, anything like that. That's a current asset, a current investment. And usually, when I audit, I usually find companies don't do that until unless they are gearing up for a big purchase, right? Unless they are doing something that acquires a lot of capital investment, right? So maybe you're buying a manufacturing plant, or you're buying land, or you're buying a building or something very, very big. So again, that's very peculiar that they've stacked up that much cash, they've retained that much profit, but yet there is no mention of them going forward with a big or bigger project, and that right there is again disconcerting for me. Moving on, lands and building, almost $1.3 million is in lands, building, and equipment. And later on, you're supposed to give a detailed a list of what comprises this 1.3 million, but we never see it. And I don't know if they did that on purpose so that we can't see it, the public, or what. But usually you get a detailed list of what all that comprises that 1.3 million. And they promise it, but they never give it to us. I'll show you that in a minute. Hold on. All right, moving on. Oprah Winfrey, $2 million. Just wanted to put that in there. I thought that was neat. Here you go. Here's one, Schedule F. Here you can see that they wired, Invisible Children Incorporated. They wired $2.3 million to Africa, to Sub-Sahara Africa. But for one reason or another, they don't list the organization. Right? They don't list the organization, and it took me a minute to piece things together. But this is somewhat odd, and the reason why is because, again, anything that's greater than 5,000, whatever have you, it should be listed, and they don't. And I think this is just an oversight of the oversight on the part of the auditors in California. You don't really get to see one other thing is I want to show you. You don't really get to see, their sister companies or organizations, anything that they have fiscal or operational control over. You don't get to see it until here. This is what kind of confused me. Right here, it says all funds are sent through wire transfer directly to the accounts held by Invisible Children Limited, the NGO in Central Africa. So obviously, ostensibly that the Invisible Children Limited is a sister company or related company to Invisible Children Incorporated, but yet they're not listed as a sister company anywhere on the books here, and that was kind of odd. Moving on, I talked to you about the production costs or the film costs or what have you, that it was so much amount of money, but here we look and we see that they did push another related organization that's called Invisible Children Feature Film LLC out of San Diego, California. But look what the income is on column D. Look what the income is, 0. You know, and look what the end of year assets are, 0. You know, and I don't know what to make of that. I don't know what this is about. But that again, that's odd. Let me see here. Oh yeah, they had to list here. I don't know how great nepotism is in this, how extensive nepotism is in this organization, but Ben Kesey, of course, is the CEO, and he's married to Tiffany, who's the human resource director. That had to be disclosed. And then here, I told you about the schedule, the depreciation and amortization, the fixed asset list, and they should have a schedule of depreciation, at least what's been depreciated for the fiscal year, and it says there's a schedule here. That's what this says, that there's a schedule here, and that the different dates that the assets have been acquired vary, and you should have a total schedule. But again, it says see attached, and you don't see it. I mean, this is the end of the report, and you don't have it. So again, just trying to wrap this up. This is my summary analysis of Invisible Children Incorporated that was submitted for the financial statements that was submitted for the fiscal year of July 2010 through June 30th, 2011. My name is John Allen Shaw. I'm the founder of Wasatch Accountants here in Salt Lake City, Utah. Thank you very much for listening.